So welcome back, folks. So before we receive Mr. Schneider online, first of all, we have here Athabasca Uranium, the stock, which is in a nice technical situation. Yes, it is in a downward corridor, but still, worth to watch for potential breakout. I'd say for a day trading opportunity, if ever is able to break the 1071 resistance, that would be a nice opportunity to be able to day trade until it reaches the top of that downward corridor. So Mr. Schneider is there on the webcam. I don't know if he's present, so we'll be able to talk to us about the prospect of his company and why Athabasca Uranium represents a good buy for potential investors. So do we have Mr. Schneider online?
Yes.
Excellent.
Thanks, Christian, for inviting me to your show.
So, excellent. So, Mr. Schneider, first of all, I'd like to ask you a question. Do you hear me?
Yes, I do.
Excellent. So, first of all, tell us why, ever since your IPO in 2010, Athabasca Uranium was created. So, why? Tell me about Athabasca Uranium and why you guys have decided to focus on the basin.
Well, the reason we chose to locate our properties in the basin is because 25% of the world's uranium is produced in the Athabasca Basin in northern Saskatchewan, Canada.
Okay.
What's compelling about the Athabasca Basin is that the ore concentration levels are hundreds of times more concentrated than anywhere else in the world. Just for an example, the China Guangdong Nuclear Power Group recently purchased a mine in Africa, Namibia, for $2.2 billion. The concentration levels in that mine are 0.5%. That mine is located 14 miles away from the Rossing mine, which is owned by Rio Tinto. Okay. And again, the concentration levels are 0.5%. In the Athabasca Basin, in the McArthur River mine, as an example, the concentration levels vary from 17 to 30%. So you can see what a great difference that is. Yeah. And what that means is that if you mine a ton of rock in the African mine, you'll get 50 pounds of uranium. But if you mine a ton of rock at the McArthur River mine, you'll get 500 pounds of uranium. So you can see why the difference, and this is why we've chosen to be in the Athabasca Basin. We've aggregated 62,000 hectares of prime exploration properties located near the rim of the basin where the shallower discoveries have been made. For example, we're in the same trend as the Key Lake trend. There Cameco took out 200 million pounds of uranium. Okay. All of our properties are located close to existing discoveries or mines. The Keith Lake that we're drilling right now is located 22 kilometers from the McArthur River mine, which is arguably the richest mine in the world. Excellent.
So location is key, and you guys have chosen a good location with all good projects around you. Infrastructure is there. But tell me, Mr. Schneider, what about the Fukushima disaster that happened? How did it affect Athabasca Uranium? And what's your take when many countries, including Japan and Germany, have decided to just review their nuclear programs? How do you see the prospects in terms of financing for a company like yours?
Well, we live in interesting times. Here's a tsunami that you don't see once in 300 years. We were just closing $3 million financing at 38 cents, and we did close it the day of Fukushima. 3 days later, our stock price was down to 16 cents and then dribbled down to where it is today, around 10 cents. Of course, this affected every uranium producer and every uranium exploration company in the world, too. Cameco at one time was trading in the range of $50 a share, and today they're at around $18 a share. So it has affected everyone, but that represents great opportunities now. And when you talk about what other countries are doing, for example, Germany comes to mind, where they've said that by 2020, I think it's 2022, sorry, they want to be out of nuclear power completely. But recent studies in Germany have indicated that in order to do that, it's going to cost the country $15 billion. And the expectation is that they will purchase their power from France, and France will be producing the power using nuclear reactors, so go figure.
Yeah.
Now, when you look at Japan, Japan's, of course, all of their 54 nuclear reactors were down. They've started 2 up again. We have a nuclear expert on our advisory board named Tom Dorlett. Thomas has been in Fukushima 3 times since the earthquake. and is well known by the folks at TEPCO in Japan in assisting them. He believes that Japan has really no choice. They have to bring those nuclear reactors back on. Currently, they're producing their electricity using power generators, and they're importing LNG. It's very expensive, and in order for the country to progress, they're going to have to go back to nuclear.
Okay, so you still believe in the nuclear association assertion that there will be a shortage of supply eventually, and that exploration companies will eventually benefit after this chapter of Fukushima, right?
Well, there's quite a few different sources are indicating that there will be a shortage of supply, actually really quite quickly, perhaps as near as 2013. Right now, globally, the production of uranium is 94 million pounds. The consumption is 155 million pounds, so there's a shortage already of 60 million pounds.
Okay.
In 2013, the United States-Russia disarmament agreement expires, and that accounts for 17% of the world's uranium. So that's going to come out of the market with a click of a button. So Cameco a year ago indicated that by 2013 they indicated that there should be a shortage. That looks like it's going to be come to reality, because 2 mines in Australia that were scheduled to come into production are being delayed now. And so I believe that certainly there will be a shortage.
Excellent. Now let's talk about in terms of technology, because I was looking at your company and you mentioned that you're using almost the same technology and the same people as Hathor Exploration use. First of all, can you elaborate on that? Because I also know that you recently hired the University of Athabasca in the recent press release that you made. So elaborate with us in terms of the technology. What gives you a hedge compared to the other exploration company?
Well, a new exploration tool in the Athabasca Basin is high-definition seismic. Not all companies use that tool.
What does it mean?
It's very expensive. High-definition seismic is different from what's being used in oil and gas, in that it produces a much clearer image that can be used for mining.
Okay.
It's quite complex, so I can't really get into it in this short time. But this is the technology that was used by Cameco at the McArthur River mine. They discovered another ore body called P2 that had 200 million pounds. Cameco used that technology again at Millennium when they were putting in their mine shaft. Ariba used it at Shea Creek, and Hathor Explorations used it at the Rough Rider, where they made the very large discovery that eventually the whole company was sold to Rio Tinto for $654 million. We were able to acquire a property called Keith Lake after Fukushima. This was at a time when uranium was off the screens of everyone. We were able to get that property without burdening the treasury of the company. This property had $3 million worth of work done on it, $2 million of which was high-definition seismic. This opened the door for us to be able to use the same people that Hathor used, the same technology, without incurring the expense of doing so. We engaged the university, and specifically Dr. Zoltan Heinold, who has had a lot of experience in the basin, and with that team we went out and drilled in November of 2011, and on our very first drill we did hit uranium, although it was at a very low counts per second of about 115. But when we look at what Hathor was hitting in their original drills, they were hitting 120. So subsequent drills have produced some counts per second of up to 175. So we know that we're close. What we've done is we did something called SEM logging. There we did MAG and EM down a hole, which is usually done from surface. We did gamma ray, and we also did optics. So we have a picture of the holes going downwards, so we can see where the various zones are. And what has emerged from that is a conclusion by the university team that our geological structures are very, very similar to some of the other mines, existing mines in the area, including McArthur River. So there's a great deal of excitement. The University of Saskatchewan has a 3D room where they can show the geological structures in a three-dimensional room. You put on the glasses, and the the data comes out to you stereoscopic, so it's actually very exciting. If you're ever in Saskatoon, for any investors, I would advise them to give me a call at the university.
Excellent. Just two things I want to mention because we're running out of time, Mr. Schneider. First of all, are you looking for, in terms of a joint venture opportunity for Athabasca Uranium? Because I know it's really hard, especially for exploration companies, to continue to have the financing necessary to continue to explore their project, to be able to come with some production, to bring the projects into production. So are you actually exploring some joint venture opportunities?
Yes, we are speaking to a number of groups. There are quite a lot of joint ventures in place at the Athabasca Basin now, as you can imagine. Rio Tinto has some joint ventures, Cameco has.
Okay.
The French government through Areva has about $2 billion invested. The Japanese government has $1 billion in a number of different joint ventures. And even though TEPCO is very stressed financially, they have made a statement that they will not sell the Athabasca assets.
Okay, exactly.
So you can see how important that is. Mitsubishi has $20 million invested there, and there are a number of other companies, a private Korea company, $17 million, KEPCO, which is the Korean government, has $230 million invested in various joint ventures. So we're looking for a joint venture with one of those companies. But maybe someone new, because the companies that are visibly absent from the basin at the moment are China, Russia, the UAE, and even the United States, which only produces 4% of its uranium consumption from the United States.
Okay. So in general, I understand, but what do you think they have been reluctant to invest in those countries? Because they seem to be, is it because they are reluctant to invest in Canada because they see it sometimes that when foreign companies come in, that the government tend to be less, I should say, business friendly with them, or especially with some recent headlines that were made with some Chinese company that wanted to acquire some oil companies? Is it because because of that Russia and China and the U.S. have not been that present in that segment of Saskatchewan?
Well, up until recently, China actually was restricted from investing in uranium mines in Canada. But on July the 19th of 2012, an accord was signed, which was initiated during Prime Minister Harper's visit to China in February, that China can now own percentages of uranium mines in Canada. So we do expect some increased interest and activity, particularly in the Athabasca Basin in Canada.
So before we only have 1 minute left, Mr. Schneider, I just want to cover 2 points. For an investor who's looking at your company right now, can you give us two reasons why it should look at your company and consider it as a potential buy?
Well, we're a company that has great geological structure, so much so that we're currently under NDA with one of the larger uranium producers in the world. They've looked at our geological structure and are impressed with it.
Okay.
We have a team that has found uranium many times before, so we feel that we're in very good hands there. And then, of course, the low stock price. Now is an excellent time to make an investment in our company, Athabasca Uranium, and you can check out our website at athabascauranium.com.
Okay. So, Mr. Schneider, thank you. Hope to see you eventually in Montreal for another interview.
I'm looking forward to that. Thank you very much, Kristen, for inviting me.
Thank you, Mr. Schneider.
Thank you.